Good morning, everybody. It's Friday, January 10th, 5:26 a.m. Central Time. Grain markets are mixed to higher this morning. Matt Bennett is joining us from Iowa this morning. Good morning, Matt.
Morning, Joe.
Guys, we're going to start off with these 45Z headlines that were out yesterday.
So, the Biden administration plans to release short term 45Z tax credit guidance today. President elect Donald Trump's administration, however, will decide the final ruling on the tax credit. Trump has pledged to repeal President Joe Biden's Inflation Reduction Act, the legislation that actually started the program. The Biden administration believes companies will be able to follow the interim guidance if and when the Trump administration finalizes the rule. The tax credit was scheduled to become effective on January 1st, but a lack of guidance from the US Treasury threatened to make the program inactive. Wintry weather back in Washington, D.C., and former President Jimmy Carter's funeral could delay the release of the guidance.
For those of you guys who don't know what this is, it's a big deal. We've been talking about it for a while. The 45Z tax credit, also known as the Clean Fuel Production Credit, is a provision introduced under the Inflation Reduction Act of 2022 in the United States. Its purpose is to encourage the production of clean fuels and support the transition to a low carbon economy. And as it relates to our crowd, we're talking about clean fuels being made using soybean oil, corn ethanol, that sort of thing. Corey Levinsky, our friend at Biofuels Law on X, said this yesterday. He's as sharp as anybody on this. Word on the street is that Treasury will issue a notice of intent to propose rulemaking for the 45Z clean fuel production credit tomorrow. This is not a final rule and will require a comment period, so expect the process to finalize the regulations to drag on for a while. But then I saw this, Matt. Soybean oil was up 2.8% on Thursday. It's up 3% this morning. Who knows what?
Yeah, I mean, I guess one thing that I've been told is that one of the proposals here is that used cooking oil is not going to factor in.
Mm,
If that's the case, that's a massive undertaking,
yes.
and that could be huge. Of course, for vegetable oil, soybean oil, of course, would be the one that we'd be most excited about. In all honesty, Joe, I know we talked about this before. I continue to talk about it, but this commitment to some sort of a renewable fuels program, given the global competition we've got from South America, it's something we have to see. So let's hope, that this little move that we're seeing here on soybean oil is something that is a good sign, and that maybe we can get a commitment that would be something that the grower can work with and something that'll help the entire situation, from a air quality standpoint, whatever it is they're going for.
For those of you guys unfamiliar with the used cooking oil piece that Matt mentioned, essentially what's happening here in the United States is that we are importing used cooking oil from China and other places and using that to produce renewable fuels rather than using our own domestic soybean oil because by the way that they measure carbon intensity, imported used cooking oil has a better carbon intensity score than soybean oil produced domestically. Don't ask me why, but that's the way that it works. So I don't know. There's also a big fund short in the bean oil, Matt.
Yep.
It's not a huge fund short. They were short, I think, 32,000 contracts as of last Tuesday. Record net short for comparison is like 110. So it's a fairly large short position. So maybe if you're net short bean oil or you're holding the short and you see this headline, maybe you just run for the exits on that.
Yeah, absolutely.
All right, let's get to the report.
So, USDA will release its monthly crop production and WASDE report this morning at 11 Central Time. The quarterly grain stocks report will be released along with the normal monthly report. Analysts expect a small reduction to the size of the 2024 U.S. corn and soybean crops, a factor that would likely result in reduced carryout projections if realized. U.S. corn stocks as of December 1st are expected to be down less than 1% versus the same period last year. December 1st U.S. soybean stocks are expected to be up about 8%, while wheat stocks are expected to be up about 10%.
Matt, this report is often associated with volatility in the grain markets. I know that it wouldn't be a surprise if we could predict it, but if there is a surprise today, where's it coming from?
That's the big question once again. I mean, I think a lot of folks, it's kind of been fashionable to say that you think that production's going to go down, so that wouldn't necessarily be a surprise if you see production go down a little bit. I think the surprise would be is if you end up increasing stocks, that would be more of a surprise than anything. I feel like the trade's already kind of built in a little bit smaller stocks numbers for both corn and soybeans, which, you got to keep that in mind. If you get a bullish report, a lot of folks are going to think, hey, this thing could take off and go. But sometimes you get a bullish report and you don't close higher. And so I think that if there's a surprise today, it'd be of the bearish fashion in some way. Now, obviously, with quarterly stocks, there's a whole lot of things that can happen, but disappearance has to have been fantastic here in this first quarter. So, my personal thought is that you should see at least a neutral or friendly report, but I think it's expected.
Yeah, and that's not a guarantee that the market's going to rally by any means.
Right.
I did a little bit of math here. So I'm looking at U.S. corn ending stocks to use ratio. Last month, the projection was 11.4%, which is much higher than what we saw during the bull markets of 21 and 22. If they cut the corn yield by 1.1 bushels, just down to 182, and I'm working with a round number here, it takes your stocks to use ratio, all else unchanged, and they could change other things too. But if you leave all else unchanged, it'll take you down to 10.8%. And 10.8 is an area that's not as friendly as the bull markets of 21 and 22, but not as bearish as the bear markets that we saw from, say, 2015 through 2019. It's kind of in the middle. So I
Right.
think if you get stocks to use down south of 11% for the United States, I don't think you get spot month corn back below $4 anytime soon.
Yeah, I wouldn't think so. I mean, I've been toying with the numbers as well. If you're still working with something above a 1.6, though, in my opinion, once you start kind of getting that combination of this and acreage discussion, boy, it makes it tough to see a big rally. So, range bound trade, I think is probably something to be expected. But I'm with you. I think that if you get this yield to drop somewhat, take this down closer to like a 1.6 type discussion, then certainly you're going to be significantly better shape than where we were at when we were talking 2 billion bushels. But once again, I just think that combination of stocks and acreage is going to be tough to get this market to rally on down the road.
This goes back, what you mentioned about acreage. It goes back to the idea of the soybean market just being an anchor on the entire
Yeah.
thing. Like near-term corn fundamentals look neutral to friendly, I'd almost argue, from
Yeah.
current price levels until you plant 96 million acres of corn in the spring. And then maybe
Mhm.
that's an exaggeration, but it's going to be a high number. We've seen the budgets and the margins. Nobody can make money planting beans. Very, very few people.
No.
It's very, very bad. Here's some similar math on soybeans with stocks to use, and I would argue certainly that the world numbers in beans may be more important than the U.S. numbers with regard to price direction. But
Yeah.
if you take a bushel off the bean yield, and that's a pretty big cut, but if you go from 51.7 down to 50.7, it'll take your stocks to use from 10.8% down to 8.8%. If you leave all else unchanged, and that may not be the way that it works, take your carryout down to 380 million. So I think that could be, I mean, you could see a friendly soybean report here. I know the world stuff is still really bearish, but a lot of that's discounted, I think.
Yeah, I mean, there's no doubt that the bean markets had a tough time sustaining anything for a while, and so if you would throw some bullish numbers at it, you could see some sort of a bullish reaction. I just for reference sake, Joe, our numbers were 182.2 and 51.1, so
Mhm.
we were thinking that close to a bushel drop on corn, and then of course, I believe 0.6 on soybeans. But regardless, if you work that into the balance sheet, I think we came up with like a 420 type, 417 maybe as far as ending stocks were concerned. To me, that's still enough soybeans,
Oh, yeah.
but I do think you could get a pop out of it. And so, I think where this comes in, Joe, is that in the long run, you really have a hard time, as you suggested, getting super friendly because you've got massive world stocks of soybeans. But if you get a pop out of this market, if you get a little bit of a rally out of this particular report, maybe it's an opportunity to do a little bit of catch up stuff, manage a little bit of risk.
This world soybean ending stocks number 132.2 would be a record high and by a wide margin. And that's the soybean market's biggest problem is this monster Brazilian crop that's expected. Just the way the balance sheets work is just very, very ugly. You think they're going to change anything in the South American production numbers? My thought is that it's probably too early.
I think it's too early. If they were going to make a change, I could maybe see them taking Brazil up to 170. Just,
Yeah.
I mean, there's so much talk about it being well above 170. But then you got to ask on Argentina, could they maybe drop back on soybeans? I've heard some chatter, but it's so early in
It's too early.
Argentina. And
Yeah.
I don't think they'll make any changes there.
All right, let's talk about Argentina.
So, Argentina's corn and soybean crops are in need of moisture. Both crops are at risk of having their yields reduced due to weeks of hot and dry weather. According to the Buenos Aires Grains Exchange, rainfall is expected to arrive in the next week. The exchange is forecasting Argentina's major crop areas to receive 2 to 3 inches of rain between January 16th and the 22nd. Farmers have planted roughly 92% of both the soybean and corn crops. The exchange also reported that Argentina's wheat harvest is nearly complete, with production estimated at 18.6 million metric tons.
Some days, Matt, I feel like the market's trading the Argentina stuff, and some days I feel like it's not. There is some improved rain chances here. There's going to be some rain that comes back into Argentina and southern Brazil during like the 7 to 10 day period. We're talking January 17th through the 20th. Even the long-term stuff through the 26th, though, I mean, there's rain, but it's scattered and the coverage isn't great. So I don't know. Maybe it's too early, but some days it feels like the market's trading it.
Yeah, I mean, I agree with you. At the same time, again, I don't want to sound just freaking bearish this whole time today, Joe, but let's say we take 20% out of that Argentine production. I mean, takes you down to maybe 40, 42 million metric tons, takes your world stocks down to 121, 122. And so I think that you can stand some dry weather. The thing that I like about the dry weather, if we get it, Joe, is that obviously it gives this market a little bit of life. And so I think over the long haul, it should be respected, by guys like me, that are farming. I mean, heck, you get a chance at a pop in this market, whenever long term you understand that these world stocks could be massive still, even with an Argentine reduction. I think we got to at least step in and do something with it. But I hope that it gives us an opportunity.
Yeah, I would tend to think that in the soybean market, that supply scare rallies would be selling opportunities, but I
Yes.
just don't know that you've seen enough of one yet.
Yep.
So it appears that La Nina has officially arrived. According to the National Oceanic and Atmospheric Administration, La Nina has formed in the tropical Pacific Ocean, although later and weaker than anticipated. The weather pattern usually results in drier conditions across the southern and western regions of the U.S., as well as down in South America. La Nina is known to raise the chances of drought across agricultural regions in Argentina and Brazil. However, given the anticipated weakness of the weather pattern, its impacts are expected to be less severe. Experts forecast La Nina to persist through April. There is a 60% chance that it will fade sometime between March and May, and the climate pattern will shift to Enzo neutral, which is neither La Nina nor El Nino.
I really love some of these statistics. 60% chance that it's going to fade, Matt. When it comes to I think this is a bigger deal for South America and what's going on in Argentina right now. When it comes to summer 2025, this is what I was told. By summer of 25, with the expected return to Enzo neutral conditions, don't ask me what that means, the typical weather patterns associated with La Nina should subside. Therefore, it's unlikely that La Nina will have a notable impact on U.S. weather during that period. So maybe it's a South America thing this year, but maybe not a U.S. thing in the summer.
Yeah, I mean, maybe, to be honest, I think that some weather next summer wouldn't be such a bad thing. Some inclement weather. I don't wish a drought on anybody, of course, but given the situation that we're in, I mean, I'm not a big fan of a supply shock type rally. I'd rather have a demand led rally, but at the same time, if you got some flash drought stuff, I know Snodgrass has been talking about, he felt like that super dry September and October had some correlation to a dry summer following. And then, if La Nina comes in a little weaker, like you said, maybe it doesn't end up amounting to anything. But I like the old saying that the forecaster is 50% right 30% of the time, because it's pretty tough to guess the weather.
Make no mistake, farmers make a lot of money when we have big production shortfalls, like
For
a
sure.
national production shortfall. If it's a localized one, then that sucks for you
Yeah,
wherever it happened. But if you get a 2012, and I'm not predicting that, but if it happens, and it'll happen again at some point,
yeah,
farmers make a lot of money in those years,
for sure.
a lot more than in a year where you have record crops. That's
As far as a
for
farmer,
sure.
that's the most money I've ever made in my life, Joe, as a farmer, like
Yeah,
on that part of my operation.
yeah, absolutely. All right, let's look at the drought monitor.
A winter storm moved across the Corn Belt last week, delivering much needed precipitation throughout the area. Drought conditions improved in eastern Ohio, northern Indiana, and northeast Missouri. Conditions also improved in northern and eastern Illinois. The winter storm also brought substantial snowfall to parts of the high plains, resulting in an improvement in drought conditions in northeast Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country 46%, soybeans 39%, winter wheat 25%, spring wheat 33%, and cattle country 34%.
I've been told, Matt, that if and when you see this corn acreage expansion this spring, a lot of it's going to be in the Western Corn Belt and maybe into some of these areas of the plains that have been very dry. Do you read much into any of this?
I don't know. To me, I think that if you get expansion on corn, first of all, I think it's the farther north you go, you get into areas where someone looks at $10 beans and says with their APH that they can't make it work. In some of those cases, those guys can still raise 220, 30 bushel corn. So, I do think, like, for instance, you get north of I-80, there's a lot of areas that'll be heavy corn. I think the farther west you get, of course, there's going to be a lot of areas heavy corn. They're still enjoying basis from, in my opinion, that's lingering from that drought 2 years ago. But I don't know. To me, as far as the dryness is concerned, the Dakotas has certainly been problematic. You've got to hope that they don't stay near as dry as what they are, because it could be a major issue. But I do think your big expansion again is as much going to be north as what it is west.
What did the cattle market do yesterday?
So the cattle market resumed its rally on yesterday, supported by higher cash cattle and beef prices, along with a denial by the USDA that imports of Mexican feeder cattle could resume the week of January 20th. So we saw live cattle. They were up 90 cents to $3.90 higher. Feeders saw gains ranging from $2.22 to $3.65. Box beef was higher. Choice ended the day at $3.30.78. That was $2.17. And select ended the day at $3.08.35. That was up $1.46.
The market feels lofty to me, but it's felt that way for a long time. And I know we've been talking for a long time about how, these are levels that need to be protected, that sort of thing. And I would continue to tell people that, but it looks awfully good, Matt.
No, it looks incredible. But again, I mean, I think if you're sitting on, several feedlots of fats, I mean, golly, you've got to at least protect yourself in one way or another. I know a lot of folks that are in the cattle thing have gone into, the LRP. I think it's a good product, but you have to be protected somehow because, as you know, these funds decide to run for the exits for whatever reason we don't know. You could take $20 out of this thing pretty quickly.
Outside markets on Friday, guys. US dollar is about flat. Stocks are off a little bit. We've got some movement in gold. It's up $20, and crude oil is up $2.11 at 75.35 in the March WTI. Crude stockpiles extended their decline to 7 consecutive weeks this week. Everybody have a wonderful weekend. Matt, safe travels. We'll be back on Monday.